Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that today is to help you figure out what stocks to buy. And we're going to look at a scan that I like to run that looks at stocks near 52-week highs. But we're not just looking at stocks at 52-week highs. We're not interested in all of them because we see hundreds of stocks make new 52-week highs every single day. Well, in this current market environment, we've been seeing stocks make new highs almost every day. So we want to try to filter down on that. I have some criteria that I'm looking forward to sharing with you, and so let's dive right into it. So the scanning criteria that I like to use is available right here in this blog post called How to Scan for the Best Growth Stocks. It has this scan, it has all the other scans that I like to run. So for this particular scan, I looked for stocks with a current price in relation to its 52-week high that is no greater than minus 5%. So we're looking for stocks that are within 5% of its 52-week high. Next, we're only interested in stocks that are at least $15 or greater. And I've said this in other videos, I'll say it again here. The reason why we're interested in stocks that are at least $15 or greater is because that's when most institutions are able to buy a stock. Not every institution, I'm talking about the major mutual funds, hedge funds, pensions, those kinds of major players, they have a lot of restrictions in what they're able to buy, and they need a stock to be of a certain price before they're able to buy it. They're buying, since they control billions of dollars, it's really their buying that's going to ultimately move the stock higher or lower. So we want to play in a large enough pool where these mutual funds, hedge funds, pensions, whatever, are able to participate in buying the stock and buy it over time, and over time we see that stock price rise. That's why we want stocks that are at least $15 or greater. The next piece of the puzzle for this one is to have the current 50-day average volume be at least 100,000. Now I know that that's pretty low, but I wanted to have a minimum cutoff. If we raised it to 200 or 300, typically the more volume you have, the better. But when we have very high-priced stocks, sometimes having a low threshold for volume of 400 or 500,000 shares per day, it kicks out some stocks. Like Intuitive Surgical was one that not too long ago was only trading at about 150,000 shares per day. Meanwhile, at the time, it was a $150 stock. So we want to eliminate that. And a lot of the stocks that are very low volume will weed themselves out in some of the other scans that we run, and also in this ideal growth stock screen that we overlay. And we'll have a separate video on that, but it's looking at the profile of an ideal growth stock. So finally, the last piece of this particular scan is going to look at the relative strength, and we want the relative strength to be no more than 5% off of its 52-week high. We want stocks that are outperforming the market, that are dramatically outperforming the market and doing so consistently. And so that helps us really narrow down the field of what we're going to be looking at with this particular scan. So let's open up our scanner, check it out. And by the way, you could take this scan, this is not a complicated scan at all. Take this scan and put it into your trading software or your brokerage or whatever you use to scan the market. There's a lot of free services out there. take this and put it into that. It's not going to be that complicated if you just want to look at this one particular scan. I'm going to open up the scanner that I developed called ChartYourTrade MRI because I have all these scans predefined. I just click a button and it runs them all. So let's take a look. Okay, so we have the ChartYourTrade MRI scanner up. We ran it already, and we basically turned the ideal growth stock screen off just so that way we could see how many stocks are currently passing this particular scan. Right now, there's only 30 stocks that are passing this particular scan. Normally, I like to tighten up the scan, and I like to look at only stocks that are passing the ideal growth stock screen by at least 50% or more. But let's take a look at this larger picture and not only see what's passing at 10%, or which is basically turning that scan off, but to see what types of stocks are passing the scan. That's something that I always like to consider as well. What types of stocks are passing? So looking at the industry groups. So let's just sort this based on industry group and see what we're getting. We're getting a bunch of biotech, 5 biotech stocks, few computer services, looks like we got 4 there, electronics, fabricated plastic, a few more medical. Let's see, anything else pop out? 5 semiconductors. Okay, so right there, that's something that's kind of pointing us towards these little pockets of strength, right? So we have 5 semiconductors, we have 5 in biotech, we have 5 in computer services, and that's half the stocks that are passing the scan and making new highs. And there's close to 200 industry groups that we're looking at that the scan picks up. So for half of the stocks that are passing to be of just 3 industry groups, we're going to want to take a look at those groups and also these particular stocks because they're the ones that are leading the market higher and they're leading their respective groups higher. So let's take a look at these and see what they're doing, see if they're giving us any opportunities right now. Let's start with the semiconductors. So this first one, Novanta, NOVT. This actually looks like it's setting up. So it's had a big run, still have volume coming into it even after it's had such a big run. So from the beginning of the year, it's had a little over 100% gain, which is fantastic by any measure. But right now we see that it had this big move, probably earnings, and now it's consolidating sideways. And this is a weekly chart, and even on the consolidation weeks, it's still closing in the upper half of the range. So that's a sign that it's selling. So there's people that own the stock that are selling, but that demand or that supply is immediately being bought. So there's still good demand for this stock, and while it's consolidating and trading sideways, that's going to give us an opportunity to potentially accumulate this stock. So let's take a look at it. Let's take a look at the daily chart on this, because it's piqued my interest. Yeah, you see, so it has a little bit of a descending trend line over here that you could draw. It has a little bit of an upward trending line there if we're looking at it just on a short-term basis. So I would look to potentially start a position right above that daily high, so right above $53.53. So just a tick above there, and then if it does break out, I would keep a relatively tight stop on this one, and I would probably look to exit somewhere around 51.40, 51.30, maybe even down here at just at around $51 a share. So that's how I'd play that one. NVIDIA is one that we actually own for the model portfolio within the Advanced Stock Report service. I definitely recommend checking that out. It's run by my friend and colleague, Adam Sarhan. He has this Advanced Stock Reports, and he gives this model portfolio, and he gives advanced entry and exit points for every single trade, and you can follow along how he's managing the portfolio. And if you're trying to learn how to hold for the duration, he's done a fantastic job. He's held this one for maybe about 3 months now. We've kind of been in and out of it within the model portfolio. We've held Alibaba since January. We've held Adobe since January. And the portfolio as a whole is up over 50% on the year. And trading long term and holding through bases and shakeouts below the 50-day moving average, that's not something that I'm particularly good at, but I'm learning how to do it thanks to Adam and following this service. So quick plug for the service. Sorry about that. Let's get back into taking a look at NVIDIA. So NVIDIA is consolidating. Looks like it's starting to consolidate. It's had this big run over here, down week. Okay, needs a little bit more time to consolidate. One down week isn't really going to give us an entry point, but it really boils down to how aggressive are you and what time frame are you trading. If you're trading an intermediate term, yeah, you definitely need a lot more time. If you're trading more for a shorter term, holding period of maybe a couple of days or a week, let's take a quick look at a daily chart here, then that might give you an entry if it climbs above today's high with an exit right below today's low. Just one way to play it while it's consolidating and starting to find a little bit of support. But yeah, whatever kind of style works for you, you could look at the rest of the channel. I talk about my own style in a lot of these videos, but at the end of the day, we all need to find a style and a methodology that's going to work for us. These are just the kind of stocks that have historically shown that they have the ability to move up several 100%, and that's why we're interested in them. DQ. Pretty nasty reversal on the week so far, so it's another one that's had a big run. Not sure I would touch this one here because of that kind of reversal. I always like to think about where I'm going to get out of a stock. If before I get into it, I would look to probably exit right around here at around 38.50. Because of that reversal, I'm thinking that we probably have a little bit more weakness in the immediate future, so not something that I would take a pass on. Solar Edge, another one, pretty nice setup there. So on this one, this is actually called a short stroke pattern. It's the shortest pattern that I look at on this intermediate term time frame, where you have a long bar like this one and then a very short tight bar right there. So next week I would look to potentially buy on a breakout above this week's high, which is 38.40 on Solar Edge, SEDG. A lot of great opportunities. Then First Solar. Yeah, this one too. Wouldn't call that a short stroke pattern. I would want to see this one continue to consolidate a little bit more. Maybe you get a little bit more of a consolidation. Let's just take a look at the daily chart. I'm getting interested in a lot of these names here. So you see that it's consolidating right around here, and I would if that $60 level is able to hold, then I would want to buy on a breakout, maybe above, say, 62.25, like right around that high, or maybe even hold out for 62.56. So if it's making a new high, then I think that it could be off to the races, and then you have your stop down here right at around 60. And then if it does continue to run, I would look to move my stop up to break even as quickly as possible. The name of the game is risk management, and we want to play defense. We've got to play strong defense, because the less dollars we give up on losing trades, the more quickly we're able to compound our gains on the winning trades, and we have that much more capital to put into potential winning trade. That's how I like to do it, especially on a shorter term swing trade account. I have an account that swing trades that most of the winners are held anywhere from a couple of weeks to maybe a month or so, but losers are often exited within the same week. Let's take a look at some of the stocks on this other page here. Let's take a look at some of these biotechs. Interesting space. Okay, so Insmed Incorporated, huge gap up, more than doubled on that gap up. Incredible move, and just been trading sideways. Tried to break out. That breakout failed so far. Personally, I think that it needs a little bit more time. It's not something that I would look to get into right here. I think that if you were aggressive, you would probably have bought it when it broke out above that real short descending trend line, and so maybe get above that weekly high and play that reversal week there, even though the volume was pretty non-existent on that. Again, this is an aggressive move, so you would have played that. Right now, support seems like it might be at around the $29 level. It all depends on your risk tolerance if you're going to go for something like this. But, well, you see that this particular scan, this 52-week high scan, it's giving us so many big momentum names. And so the way that you play a momentum stock is going to be different than how you play something that you might have in your retirement account. And you could do a lot of these short-term trades and make significant gains in a pretty short period of time. You could also lose a significant amount if you're not managing your risk properly too. So if you need help managing risk, we have a whole video series on that as well, and I did one on position sizing. Definitely check that one out. I'll link it in the description. Cura Oncology. Still kind of consolidating around here. It's grinding higher. So this would be one that if I was going to play this stock, I would look at it for more of the intermediate term portfolio, just because like it's had that kind of choppiness, and it's something that if I tried to play this on my swing trading account, I know that I would end up getting shaken out in a hurry. It's not tightening up enough yet in order to warrant being in that shorter term account. So more of an intermediate term play right now, in my opinion. Zoma Corporation, huge run up, and now it reversed hard, and it gave up almost all of last week's gains. don't think it's buyable right here, at least not for me. I wouldn't touch it just yet. I'd give it a little bit more time. NKTR Nectar Therapeutics. Wow, quite a move there. So if you were fortunate enough to have bought this on that little consolidation, and so this looks like a Minervini type of base where you have this volatility contraction pattern where you're consolidating for multiple weeks. And this is the first consolidation, that's a second, and then it starts to tighten up, and then there's a third, and it's blasting off. Support's right there, so you could have gotten in on a real nice entry point just as it started to break out, and then 2 weeks, and you're up nearly 100%. Not a bad return. And so that's the power of scanning for these kinds of stocks, and also making sure that you have a little bit of a tighter parameter and not just looking at any 52-week highs, but to have the ones that have that that are above $15, because that's how you can have huge demand like this, like it's starting to pour into this stock. So we'll see how much further it runs. Not buyable right here in my opinion, but definitely one to keep an eye on. Yeah, I think that's it. I think that's a good amount of stocks to go through. I think you get the point. So let's wrap things up. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, if you like the video, please give us a little thumbs up. That really helps us out a lot. And make sure that you subscribe to our channel, and that way you get all of our updates. Thanks again for watching. I truly appreciate your time and your attention. And if there's anything that you'd like to see in a future video, also let me know that and I will try to make that happen. Thanks again, and I'll see you real soon in the next video. Take care.